Is AI selling off, and could this be the top? Today we'll break it down to you. A lot of indicators starting to reveal themselves. Before we get started, I want to thank our sponsor, and that of course is Tangem, where you guys can get into self-custody. Super cool and easy to do. This is one of the best tools out there, so secure your hardware or your crypto with your hardware wallet. Very easy to get set up on this. Again, this is probably one of the easiest cards and self-custody tools out there to set up. All you have to do, use our link. It's going to give you more discount. This stacks on top of the discount that's currently available, which is 2 times Bitcoin rewards and up to $40 and a 10% off. So lots of cool stuff. This only happens until the 30th of July. So get out there and do it right now and get going. Let's go over to a couple of points I want to showcase and kind of focus on right now. And this is in reference to what's going to happen tomorrow, and that is the Fed's FOMC meeting is happening. And you have a lot of split expectations in the market. You've got interest rate futures imply maybe a 30% chance of a hike, and then you've got a 70% chance of a rate cut. And basically what we're saying, it's all over the board. And if you look at not only the uncertainty of where the markets are and the uncertainty of what we know around Kevin Warsh of how he's going to be able to give us forward guidance, all of this is still up in the air. And the last point is what's happening with the Iranian war. And this, of course, gets into the energy shock, which, of course, has implications for what we're seeing when it comes to inflation. So lots of issues right now facing the Fed. This will be a very interesting, this may be one of the most important FOMC meetings that we have had in the last year. You guys tune in. We'll do a live stream tomorrow. If you haven't subscribed, do that right now. Hit the little bell, because that way tomorrow when we go live, you'll get a notification, and it makes it very easy for you to join in on the live stream tomorrow. We'll take a few questions tomorrow as well, so if you guys want to chat, let's get into it. Here's the nemesis of this whole scenario, and that is Citadel throwing it in, saying, we think there might be a surprise rate hike. This, of course, sent shockwaves through the market, but at the same time, many others were pointing the exact opposite direction. And I think that is the question. Why Citadel put this out? Why were they so interested in saying that we could see a surprise rate hike? So do they know something that we don't necessarily understand? That's the question. You look at what else is going on in the market. Well, you've got crude oil. And when you look at crude, overall, the issue right now has been around hovering at this kind of this point right here between 60 to 70, 75 a barrel, which is where we're hovering right now after last week's spike. And again, this has been going up and down and whipsawing quite a bit because of the ceasefires, non-ceasefire, all the back and forth between Trump's administration and, of course, the Iranian leadership. And that's where we are right now. Granted, I feel like right now this is kind of the spot most likely is where we're going to be until we see what's going to happen long term. And if you look at that and then compare this to where the strategy is for the Fed, because remember, he's got to look at energy. It's one of the key and core components of inflation. People were asking how Trump thinks this might play out. Watch this clip.
Are you worried that the Fed's going to hike rates to counter?
Well, they have a board, and Kevin's fantastic, but he's got a board, and the board members are very political, I would say. So, you know, we fight our way through the race because we're doing so well. But no, he's got a board. You know, he wants to do the right thing. I know what he wants to do. But you need the consent of some people that have perhaps bad intentions.
All right, so key statement there was, I know what he wants to do. Balchunas kind of hit it right here in his tweet. This quote stuck with me yesterday from Trump, the interview. It's in reference to Warsh telling me that I think it goes back to not overthinking the Fed rates, because it really isn't complicated. He put, meaning Trump, put Warsh in here, or campaigned for Warsh being the select here for the Fed, and he did it because he felt like Warsh would be coming in as a dovish potential chair. And I think this is really what it boils down to. If he is pushing in that direction, it really is about politics. Who of that governor's board is going to be pushing against this? So watch for the numbers coming out of the ones who abstain and the ones who are for a rate cut tomorrow. Those will be very critical as we see that data come through. If you go in and look at the rate hike theory under Polymarket, you can see, of course, the July is very low, but if you get into September and October being the highest, October has a potential. Back here in July, this was only a 56% probability. That, of course, to where we are right now, jumping to just in the last few days to almost 60 or over 70%. So big jump here, and I think the point is that we are continuing to see inflation numbers coming in. We're also continuing to see a strategy playing out in this market from energy costs, which is really kind of boiling down to maybe a long-term threat for economic conditions here in the United States. All of that taken into consideration, I want to jump in and take a look at a clip here because this is Tom Lee talking about whether or not would you take that bet on Polymarket. Take a look.
Would you take that prediction market bet, so to speak? What do you think? Is there any real chance the Fed hikes rates this week?
You know, the prediction markets and funds want to hedge on a binary event. That's why you got the 30%, because someone needs to hedge something. But I'd say the probability is low. I mean, I wouldn't expect them to raise rates.
And oil is down right now because there's some talks. And by the way, tomorrow could be up again. We have no idea what's going to happen. Depends on the talks. That's got to impact the Fed's thinking.
Yeah, because then they just have to see this little bubble that they have to kind of manage through. I mean, I think in some ways they might just shrink the balance sheet instead of doing a policy rate change.
A quantitative tightening?
Correct. Pressure on growth, but not to deliberately slow the economy.
Crypto. I think you've heard about that,
Yes,
Ether?
I have.
And Bitcoin, they've been coming up. Semiconductor stocks have been going down. The dispersion between the two is the widest in years, if not ever. Are those two things related, or is it random but interesting?
The price of crypto is not following what people expect because they're saying, hey, the Fed could be hawkish, so crypto should be down. The ratio of Ethereum to Bitcoin has been going up, even though the Clarity Act looks like it's really being stalled.
All right, so he hit a lot of things there. Let's kind of backtrack on one of them, the Clarity Act being installed, but at the same time, we see kind of this, I will say somewhat flat, maybe slightly up market in general. And you can kind of also consider what Tom is getting at around a no rate cut, how that plays out with the rest of the global markets in general. And then if you look at the semiconductor market in comparison to what's happening in crypto, is this finally maybe a rotation trend that we truly can see? Because that's been the slowdown that many people have looked at, and that is around AI. All of this could really get into one thing, and that is how does this market play, and is Clarity that important to crypto? Here was Tom Lee talking about it.
As you know, the big banks and the asset managers are tokenizing assets and want to build stablecoin rails. If they have to be subject to state regulations or local regulators, it is going to give a lot of people cold feet.
But are they for it or they're against it?
Many of the asset managers are for it.
The SEC was created in 1934, I think, ish. This is a 1934 type moment. And the reason the SEC was created is because state regulators, you might have one rule in Indiana and another rule in Virginia, and investors like, I can't manage both these rules. All crypto is having that 1934
Correct.
type moment, right?
Exactly. And in addition, crypto is, because it's turning money into software, a lot of things can turn into money. Loyalty points, reputation. Then you want a governing body to oversee all this. Now, Japan, Russia, Europe are actually passing Clarity Act-like bills. So the U.S. is risking getting behind. That's why I think crypto is recovering, because outside the U.S., it's being embraced.
Even though you say you actually think, look, they had, a few legislative days left before the midterms. Could this be a lame duck kind of move, do you think?
But it does sound like that a lot of concessions were given, but that those who oppose the bill still want to extract something else.
And a key point that Tom's getting there is those who oppose the bill, people want to extract something else. And that may be what we're seeing right now is more theater coming out of D.C. because there's a handful of senators on the Democratic side that feel this is such an important piece of legislation that they can extract something else. So be on the lookout, guys. We are right in the middle of possibly the next innovation era of our lifetime. The last one we saw was really in the birth of the internet in the early 2000s. A quarter of a century later, here we are in finance. And when you look at what Tom is doing, and I say Tom Lee, Fundstrat, they're taking some very interesting shots here. And this, of course, is Fundstrat, who was on a podcast with Sean Farrell. and they go into the whole idea around virtuals. This is talking about agentic. So think about where agentic could be in just the near future if clarity does go through. Even if it doesn't, in the United States, where agentic will be globally and how virtuals may be playing a big part of this. So just watch where Tom Lee, and because I think Fundstrat is one of those that finally understands what's really happening in this market, and maybe some of these indicators are signaling where this market is going to be going. If you look at the performance of virtuals, this has been one of those, especially as an altcoin, but primarily as an agentic protocol that has been depressed quite a bit. So the move here, take it for what it is, but I always say where there is smoke, there's fire, and especially on innovation cycles. Now, it may not happen soon, but I start to look at agentic becoming a major key factor. So we could see something moving there. Just pay attention. When you look at other trends, you have to look at what's going on in the Korean stock market right here. And there's a reason that all of this massacre was intensifying. As you saw, the Korean exchange triggered its 9th circuit breaker of 2026, which halted all trading. And the primary thing it was pointing at was Samsung and SK Hynix. I don't think so. The reason that we started to see all of this liquidity rushing out of that market was something very simple. And in fact, we have talked about it on this show. We actually had a whole episode that pointed to this right here, and that is CXMT. We talked about it early, probably 2-3 weeks ago, saying this most likely could trigger some liquidity events. There you have it. CXMT's 466% market debut, which makes it the second largest China-listed company in history. So there is some very intriguing things happening in Asia right now around where liquidity is going to flow. And I want to kind of cap this off with a clip that gets into how AI could be at a very interesting point right now. Take a look.
Now, trading on South Korea's benchmark Kospi was paused temporarily by sliding 8%. Shares of SK Hynix have plunged 45% from their all-time high in June as concerns about overcrowding, capex and competition set in. But look, here's the thing. What do you see? Yeah, you see a chart that goes up and then goes down. And it's still up 43% year to date. So if you are an owner and you bought at the right time, you bought at the start of this year, you have made roughly 50%. This is extreme volatility. And it's not about the war, it's not about tariffs, it's not about interest rates, it's about AI. And it's about leverage.
All right, so I love how they always pick, if you're an owner, where you have to be an owner at the very beginning versus the ones that just got dumped on 2 weeks, 3 weeks ago. So let's just be aware of that. Timing of going into these markets are just equally volatile. And when you look at volatility, another point you've got to look at is where Jensen Huang was in here meeting with U.S. Commerce Secretary Howard Lutnick. This usually means one thing, guys, and that is that there's a deal being made right here. He wanted to discuss $500 billion in U.S. in terms of technology production and the plan around American leadership when it comes to AI. I don't know why Lutnick is necessarily going to be in charge of that, because we, of course, lost our AI czar, with Sachs. But I just wonder to what extent this could put some pressure on NVIDIA in general. Remember, Jensen just joined Twitter not too long ago, and this was one of his first posts that went out there on July 24th. For my first post, I'm sharing a letter, and this is on why open models matter. And AI will transform every industry. You can read the post there. Open models strengthen safety and cyber security, accelerate innovation and diffusion, and enable sovereignty. So it's interesting that you have this there, because this, of course, enables NVIDIA globally. Because if we started to see some pressure here from the Trump administration or any administration coming out of the U.S., putting caps or more pressure on some of these companies that are building in the East, this could, of course, affect NVIDIA's overall business as well as their stock. So that's why I think you are going to see Jensen Huang very active on X this year. So be on the lookout. If you go look at the balance sheet, this gets a little dicey here because it's showing commitments and liabilities of some of the biggest companies out there. Alphabet holding in on commitments which are extensive. That's still growth in the market. Then you look at Meta also having an extensive, even though have slowed down some AI internally. The point that they are going in to deal with infrastructure to possibly sell that, compute later on down the line is still up there. So as you can see right here, this is a good comparison to where chip makers were in the early 2000s. This, of course, was during the era of the .com, and the birth of the internet. So there was a lot of chip manufacturing going on and distribution going on. What we didn't have back then, though, was, of course, the developing Asia countries. And, of course, that means China, India, Indonesia, Korea. All of these have a new implementation around building more product. And this, of course, will play into two strategies. One, does it get us near a top? Or is this truly just the beginning of where all of this could begin? Because if you kind of compare, this was like 97, 96 where that push right there was going on. That was 3 or 4 years. Now, if you kind of compare, has similarities, but it's a much shorter frame time. It's really been over the last 12 months. Do we really have a point where this could elongate this AI play right now into many more years? I think that, of course, is the speculation on how to move forward. I want to go into that because Steve Eisman talks about that this is exactly what he's doing. Take a look.
You wouldn't necessarily short this market at this point, would you?
I would not. I sold my Google a couple of months ago. I haven't bought anything to replace it.
What happens if AI doesn't succeed?
I think we have a big correction.
How big?
I don't know. It's all one trade. People who think they're diversified because they own 60% stocks and 40% bonds are missing the fact that they're actually not diversified. Because of their 60%, more than 50% is tech and AI related.
What would it take to get you to deploy that cash?
I don't know yet.
Okay, so think about that, guys. He doesn't want to deploy, he doesn't have an answer of when he would deploy cash. So that makes me wonder if many investors are in that position right now where they literally are just sitting on the sidelines. Why not park it in some stable coins, guys, and get some little bit of yield? But let's jump over to Clarity real quick because everybody wants to know what's up. You got the Senate is scheduled to recess on August 7th. Very limited floor time. And what does that mean? It means that it's going to get pushed, or maybe it gets pushed, because it's now competing with the Save America Act, the Russian-Iranian sanctions, budget bills, etc. Point being behind all this, guys, is that we are in a very, very critical time right now. So we're going to cover this more, including the Fed tomorrow in terms of the FOMC. This will have a major impact on the markets as we play this out. So it's going to be a big week. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.